Tech Media and Biz Talk Today TV. Welcome everyone to the Money Path. I am your host, Todd Schoenberger. Joining me today is Mish Schneider. She is the Chief Strategist at MarketGauge.com. Mish, what a great quarter, just a fabulous quarter. We had the S&P 500 going into the final trading day today, up 7.6%. All signs were pointing to we were going to have a lot of downward pressure going into the quarter, mainly because of the tariff talk. S&P is also up 13.5% year to date. What are you telling clients these days to expect for the fourth quarter? And what about 2026?
Before I get into all of that, Todd, I don't know if you've seen my report for 2025 showed the stock exchange that you have behind you only engulfed inside of a snake. Because this is the year of the snake from the Chinese astrology standpoint.
Okay.
And so when you're asking me about this year and now what's going into the fourth quarter and then possibly next year, which by the time we get to the turn of the new year for the Chinese, it'll be the year of the horse, which is a very different animal than snakes. In fact, snakes and horses don't generally get along. That will be interesting. But the snake, I like to use that because this year has been kind of like a snake, right? I mean, snakes can be very peaceful and travel along without any issues, but they can also coil and hiss and bite. They can shed their skins and change constantly. And that's kind of what we've seen. So the fact that we are now in September ending third quarter, going into the fourth quarter, with such a tremendous performance, we have to remember that tremendous performance is nuanced because it's only really in certain areas of the market. So I would say number one is we absolutely have to see the growth areas stay in the game. We cannot see a major correction there because that's been holding up the market. Today, NVIDIA, new all-time highs, right? We love NVIDIA.
Yep.
Number two is we have to see some of the areas of the market that have not really participated. What I say, we were talking before, I love expressions, so I'm saying one of my other ones that I forgot to tell you was the weak links, you don't want them to become anchors.
Oh my goodness, look at this.
Yeah.
Breaking news. Weak links, don't make them anchors. I love that.
Right, so what do we have as a weak link? Regional banks. So people go, well, why should I care about regional banks? And that's a really good question. You know, we're looking at tokenization. We're looking at, a whole new digital economy. The regional banks almost seem old-fashioned, except for one major thing. That's where a lot of commercial real estate lives. And so we don't want to see a repeat of March 2023, when all of a sudden there was an insolvency and the market dropped 20% in a matter of 3 days, wiping out a lot of money and then had to build itself up. Keep your eye on that because it's under the 50-day moving average. The retail, the consumer, okay, we had a good year. We actually made new 2025 highs if you're looking at XRT. However, 104 was the high in 2021. In 2025, it's been 87 and change. So the consumer is not dead, but not exactly robust. That could change and get worse. And then, of course, the transportation sector, which is also very split because freight's down 12%, while the transportation sector has really been trying in this last week to get to the July highs, probably on the backs of things like Uber, right? So that's where I'm looking. And unless we see a breakdown further, or in the Russell 2000, a breakdown under last week's low, which is kind of testing right here, at this point, this could just be nothing more than a little bit of a jitters, some evening. Obviously, we have a lot of tax evening at the end of a quarter, but also, of course, the big old government shutdown.
Right. Yeah, and that is looming, and we'll hear more about that later on tonight, actually. So at midnight, the government will run out of money, supposedly, and then a few essential items, I guess, agencies will be shut down. But regardless of that, because it sounds like Wall Street is willing to put up with a shutdown. I mean, I'm sure if it's prolonged, that would cause a problem. But I want to go back to something you said. I haven't heard one strategist at all in all of our BTT shows talk about it, and that's the regional banks. I'm sorry, regional bells. The regional banks. And when I think about the regional banks, one thing that I have recognized with a lot of these, and I was just having this discussion the other day internally, is that they are not as aggressive as the bulge bracket banks. You see Chase, Wells Fargo, Capital One. They are going into these areas. They're actually taking market share from the regional banks. Are you suggesting, though, that that is a level of concern, not just really for short term, but really thinking long term, because you could have commercial real estate that could go under that would impact those banks. Is that an area you're talking about? All the regional banks just try to stay away from them right now?
Well, I certainly wouldn't want to be a buyer of regional banks at this point, but I think there is certainly a level of evolution, as you've just suggested, where that may not be the biggest influence in the overall market because it's all about AI, AI, AI. However, there's still a majority of people in this country that do their business, whether it's buying commercial real estate to open up local mom and pop shops, or whether it's buying and homes and then going to their local bank for a loan, or taking money out or putting money in savings. These are a whole rural community of people, millions and millions of people in this country that do their business through regional banks. And so, again, I always say weak link, not so concerning this year for sure. Anchor, more concerning. And, things can, they say the fish rots from the head down.
Mm-hmm.
And right now we don't have that because we're seeing semiconductors, new all-time highs. We're seeing, all this fun stuff with space and defense and robotics and quantum computing and, of course, AI and Google and all the areas that are growing. But sometimes you have to wonder what happens that can pull that down. And that's where regional banks are tied into not just real estate, but consumer and businesses and the overall mood. And at what point does that make an impact? At what point? I'm not seeing it yet, but I'm always looking. You don't cross the street without looking both ways, right? And that's kind of how I feel right now.
Yeah, I mean, you might be onto something too. I mean, the M&T Bank just announced layoffs. They are one of the larger regional banks in the country right now. And so clearly there is that moment where banks are probably thinking about the bottom line and how to save money because they have to think forward. So that's an interesting one, and we'll definitely follow up on that. But talking about the fourth quarter, now October seasonally historically has not been the best for the markets. However, fourth quarter has. Going back to 1928, the S&P 500 has averaged a 4.4% gain in Q4. So with that, you mentioned the consumer. What really drives the fourth quarter performance is the consumer because of holiday shopping. Are you seeing any signs right now in the markets or from our economic reports that are signaling to you that you mentioned the consumer is possibly not as robust, but do you see any further weakening, deceleration of spending as we close out the year?
Well, yes, and I think that people, and I went to a flea market, believe it or not. It wasn't exactly a big store or anything, but people come to flea markets because they're trying to buy secondhand goods and cheaper goods or what have you. And I heard these two women talking because somebody was saying, you know what, you should buy that jewelry because you need to help the economy. And this woman looked at him and she said, oh, the economy is going to crash.
Wow.
And I think, I stayed out of the conversation, but I thought there is an underlying sense of doom and gloom, even though mom and pops have been the ones buying the market. There has been $23 billion worth of money coming in from mom and pop investors over the last month. But outside of that, when they're in their kitchens and then they're out with their friends, they're talking about tougher times coming. So interesting today, the Costco actually has been bouncing a little bit. And that got me thinking, are people doing exactly what they did over the last time back to school, which was buying their stuff in advance because they're still worried about inflation. And they should be worried about inflation. And one of the impacts, by the way, of the regional banks is if the federal government has to come in and rescue them, which like they did the last time, that's money printing, which is also inflationary. Money supply is going up, also inflationary. The dollar is at some risk, also inflationary. People are not dumb. They're seeing this, and they're thinking to themselves, maybe I should buy stuff now, or maybe I'm just going to really, really keep it trim for this
Right.
season. So we have to watch the consumer to stay in the game. And I think it's all sort of tied together, transportation, consumer, and the regional banks area, and the small caps too.
Small caps. So let's you brought up a phrase to me off camera about the trifecta of inflation. Can you explain to the audience what you mean by this?
Well, I'm an old commodities trader, so I always like to preface it with that. I spent 14 years in New York in the Trade Center trading all different commodities. And what I've learned through the years, having lived through the inflationary period of 1979 and 1980, yes, I was very young,
You
is
still
that
are, Mish. You still are.
ageless, is that you have to watch a few things. And that's why I call it the trifecta. Number one, we know that gold's obviously making new all-time highs. We see silver has gotten to a 14-year high, now platinum at a 12-year high. Copper has its own situation going on because of supply issues. We've heard a lot about the energy needs of AI, and of course, we're looking at lithium and coal and nuclear, but oil and gas have been really cheap, and that's sort of an X factor. So here's my trifecta. It's not just about gold going up or silver going up, it's the ratio. So number one, once silver, the gold to silver ratio, once it breaks 80, is generally very inflationary. And it's about 80. It's getting actually a little bounce in favor of gold today. But that means gold's trading 80 times more than the price of silver. When that flips and it starts trading only 78 times more or 75 times more, not only does that mean silver's gone parabolic, it's inflationary indicator. Because remember, gold has that flight to safety quality about it, whereas silver is more inflationary. Number two, the dollar. So right now we got a little bit of a bounce in the dollar off of the lows from July, but it hasn't exactly been a wow kind of bounce. And I don't know what the shutdown will do, but if the dollar crashes really much further from here, that's trifecta number two. And the third one is sugar, which the reason why I mentioned sugar, even though it's not oil, it's sugar, because people eat and everything has sugar in it. And when things are tough, people tend to reach for the things that have sugar in it because they tend to be, unfortunately, cheaper than the healthier food. So that to me is another, and today sugar is starting to show signs of life. It's still way higher than it was in 2020 when it was at 5 cents a pound. It's now getting closer to 17 cents a pound.
Wow.
And so you have to think, what happens if sugar goes up, if silver gold ratio flips and the dollar collapses? We're talking hyperinflation potential. I'm not saying we're there yet, but my eyes are keen on that.
So with this scenario, which is quite pessimistic, I must say, the the Fed though should not be cutting rates under that scenario.
Well, one would think, I mean, what stopped it in, and by the way, I don't mean to be pessimistic because, I'm a trader. I'll tell you what to buy in that situation.
Right.
But that's a different story. Yeah, for the consumer, it's not such great news, except for, like I said, the one great thing we have right now is relatively cheap oil prices, and we'll see how long that lasts, because we also know there's a geopolitical powder keg going on. But your question, tell me your question again. I'm sorry.
Well, my question is that with your scenario, the trifecta of inflation, and you're pointing out several signs that could be bad for the consumer, therefore we're looking at potential hyperinflation maybe in some areas, then my question for you is, why is the Fed cutting rates?
Yes, let's go back to the Fed. Well, number one is we have some recessionary indicators. I mean, right now we're saying stagflation, right? Even though GDP went up, we know that there are many, many areas of the market, of the economy, I should say, that are stagnating. In a stagflation environment, the Fed has to make a choice. Do I try to save the economy, or do I try to curb inflation? And I think that's why, you constantly see Powell looking like this, because he's getting pressure from the administration to cut, but yet he knows that the tariffs can be more inflationary on top of the other things that he's seeing. And yet at the same time, he doesn't want the pressure of driving the economy into some kind of from stag to recessionary time. That's why they will cut, because they will make a choice that inflation is transient. Remember that good old word?
Right.
But
right.
he has to rescue the economy. And that he's getting daily calls about that,
Hmm.
about lowering. So we'll see. And and by the way, they lowered, and it didn't do very much. The yields didn't really go down very much. In fact, initially went up. They're down a little bit now. But there's a point, Todd, where if they cut more, it could actually wind up being a risk off for the environment, because what you don't want to see is the S&P go down and yet the yields drop and the TLTs go up. That's how you measure risk. And right now we've been in risk on forever. So that's the second thing besides trifecta of inflation is you really want to watch not only what the Fed does, but what the yields do, both from the squeeze point, but also from the long bonds point, which is my particular favorite to watch.
Well, the cut in rates at 25 basis points, there is a lag effect, so it could take a little bit of time till we actually see any benefit into the economy. The Fed is meeting again this in October in 4 weeks, so there's a lot of talk of as far as will they continue. They gave an indication that they were possibly going to cut again, but with your scenario, I don't know. I think the Fed officials were going to take they're going to really have to discuss this and see where the metrics come in, because one of the data points that the Fed focuses on, as you know, Mish, is the labor report. And we touched on the government possibly shutting down, but now there is talk that the BLS won't even be able to release the Friday data. What does that mean if the Fed, say we have a prolonged shutdown? That type of uncertainty, how is the Fed supposed to actually make a cut if they don't actually have the paperwork to talk about it?
Right. And not only that, by the way, there's an issue with paying down the debt when the government shuts down, by the way. So there's that too. I don't know how the Fed would necessarily deal with it. I mean, obviously, that's going to be a big factor. And we see that where massive amounts of layoffs were announced this week. In the oil industry, I just read a
Right.
ton of layoffs being announced. So even though we may not have the actual statistic of the labor market, which by the way is pretty been suspect because it gets revised constantly. I mean, I went from probably focused on it maybe a little bit to now I'm not even focused on it at all, because instead I'm watching what's happening in the actual industry. And of course, we'll start with earnings again. That'll be interesting as well. I think the Fed will probably look at that, like this, at the number of layoffs that they're reading about, and they'll make their own determination. They'll see the government shutdown will obviously cause a lot of issues with people's jobs, whether or not those jobs even come back.
Yeah.
There's theories that this is somewhat designed to actually eliminate those jobs. So yeah, I think the Fed is probably in the worst spot that they
Right.
have been in a very, very, very long time.
Yeah, they definitely are in a pickle right now. And some people will arguably say that they put themselves in this position by not cutting sooner. And
I would agree with that, by the way. I thought they should have cut sooner. Yeah.
yeah, so now this is the result of procrastination, yada, yada. So we'll have to see what happens. I want to go back to something you said with silver being inflationary. Silver up 45% year to date. I mean, what a remarkable run. Do you see it moving higher, though? I know you touched on it, but if it is going to break 50, what's the high point that investors can take a look at?
I, I'm so bullish both of the metals right now.
Okay.
I think that the what we're really seeing is particularly gold, but now silver. Silver, of course, being more of a supply issue. There's supposedly a shortage of supply, which is why the silver miners have done so well. And of course, like I said, gold being more of a flight to safety being accumulated. And we're on holiday, by the way, right now in China. So there's
Okay.
no major buying going on because they're busy partying over there in China. So as they should if they bought a lot of gold and silver.
There you
But
go.
I mean, I don't know. I think we're in unprecedented times because so many of our policies that we have relied on in this country for so long are being changed. I mean, today I was reading that even pharmaceuticals, which of course first there was the announcement of 100% tariffs on pharmaceuticals, unless they create in this country.
Right.
Today came out that Pfizer was in talks with Trump about lowering their drug prices, but now there's the talk of Trump RX, which means now you can basically go through the White House to buy your drugs. I mean, this is what I'm talking about. whether it happens or not, these are unprecedented because, as you say, what happens to Walgreens? What happens to CVS?
Right.
What happens to all these places where you typically get your drugs? What happens to all these people whose jobs is to go to doctor's office and push their drugs? I don't know. But all I know is that this uncertainty and this level of major focus, the centric focus of Trump being in his hand in everything, could
Yeah.
either turn out to be the most ideal situation we've ever seen, a utopia, or it could turn out to be very dystopian. We don't know which way it's going to go. And that's why I'm very bullish the metals, because the one sure thing is gold. Well, I shouldn't say one. The both sure things would be gold and silver and hard assets in general, because people have to eat and fiat currency is in question, so gold goes a long way. And we have to have forms of energy, of course, and then that's where silver comes in even for our energy source as far as a conduit of energy. So that's what I'm sure of, is that I think hard assets are really going to be the place to be at this point. Like I said, unless we go into some kind of utopian and AI takes over everything and we don't even have to worry about producing food anymore.
Right. Well, well, you mentioned about the Pfizer deal. Pfizer stock is up 5% off of the news that just took place about an hour ago at the White House, and about cutting. And then Eli Lilly, actually, right before we went on air, had made a call to the White House, and I guess suggesting something similar. I know with Trump RX, I called my doctor. I told him I want to get my prescriptions at the White House. So I don't know if they'll put a drive-through window up or not. So we'll see. One final question though for you, with rates, with the 25 basis point cut, and perhaps more rates later on. What's your opinion on real estate right now? Is this an area that investors should consider?
Not yet. Not yet. If the mortgage rates get down, well, obviously, if you have a lot of cash and you've seen real estate prices come down in your area, they haven't come down that much where we live in Santa Fe. Now, this is sort of a bubble kind of a spot, right? We're in our own little universe here. But I would be kind of like what I was in 2008, very, very interested to see that if we get any kind of a cliff dive in real estate, if it goes down maybe another 10 to 20%, let's give it a range.
Okay.
And then we see the rates go down closer to 5%. I don't think we're seeing, 2.5% anytime soon. That would probably be a really good time to take your cash, mortgage up, and buy real estate. But I don't think we're there yet. I'm waiting for that. We actually sold our house right at the peak, and we're renting right now. And that's kind of like, I feel like I'm on the sidelines sort of licking my chops, waiting for that opportunity, but I don't see it here yet.
Okay, well, we will see something. Hopefully, we'll see some type of a thaw. I mean, clearly, we need more supply in real estate, and that would eventually help the housing stock. So, but we'll see. Time will tell on that one. Mish, I want to thank you for joining me today. You always bring the best. You always bring high quality. The audience loves you. And for the audience, definitely check out marketgauge.com. Learn more about what Mish is saying and her commentary and everything else that they're offering there. You'll definitely get a lot out of it. So Mish, thanks again for joining me today. We got to have you back.
I'd love to come back. Thank you, Todd, for having me. I really enjoyed talking to you.
Likewise. Well, on behalf of Mish Schneider, I am Todd Schoenberger. Thank you once again for joining me on the Money Path. Coming up later today at 4 o'clock, we have Christina Hooper. She left Invesco. She works for the Man Group now. She is going to be telling you what to expect for the fourth quarter and beyond. You do not want to miss it. So we'll catch you then. Take care.